Good afternoon and welcome to our special council meeting for February 24th, 2026. I'll call the meeting to order at 5 p.m. First item on the agenda item 1.1, Land Acknowledgement. The town of Coaldale acknowledges that we are gathered on the lands of the Blackfoot peoples of the Canadian Plains and pays respect to the Blackfoot peoples past, present, and future, while recognizing their cultural heritage, beliefs, and relationship to the land. The town of Coaldale is also home to Métis District 1 foothills. Agenda item 1.2, conflict of interest declaration, pecuniary or non-pecuniary. Are there any in the room this afternoon? None declared, thank you. Moving on to agenda item 2.1, acceptance of the agenda for our meeting today. For special council meeting agenda February 24th, 2026. I have one addition under agenda item 13.2, Coaldale procedures and transacting of business by council of the town of Coaldale. Are there any other additions to the agenda? See none, could I get someone to entertain making a motion that council adopt a special council meeting for agenda for February 24th, 2026 as amended? Councillor Reese makes that motion. I'll call for the vote. And that vote is carried. Moving down to the agenda under new business, we have our draft 2026 to 2028 operating budget. And we have our Chief Financial Officer, Tim Koba, presenting. And Tim, just wanted to congratulate you on behalf of council with your new position. Congratulations. So before I open it up to Tim, is there anything you wanted to start off before I let the library come and do their presentation?
No, I don't have anything. Thank you.
Okay, so Kendra, we'll let the two of you come up, and whenever you're settled in, you got to use your microphone, and if you could both introduce yourself for the public record, and then you can do your presentation, please.
My name is Kendra Burse. I am the head librarian at the Coaldale Public Library.
My name is Candace Langworthy. I am the current Coaldale Public Library Board Chair.
Thank you for having us here. Good evening, Mayor and Council. I'm here on behalf of the Coaldale Public Library Board to speak to our 2026 budget request, specifically the reinstatement of a full-time assistant librarian position. Over the past 3 years, our library has experienced significant growth. Door counts have increased 28%. Program attendance has grown 164%. That growth spans children, teens, families, and adults. It reflects strong community demand and meaningful engagement. We are very proud of what our small team has accomplished during this period of growth. But as I'm sure you can imagine, the difficulty this has posed when staffing levels have not increased at the same pace as service demand. So we have approached this request carefully and creatively. As you probably know from our budget request last year, we have offset costs where possible and reallocated funds to minimize impact for our 2026 budget. And thank you so much to Tim for working together with me to do this. We are grateful for our partnership with the town and how this council has consistently shown strong support for our library. And tonight we are asking for your approval to reinstate this position so we can continue to meet the needs of this growing community. Thanks.
Thank you. I'll open it up to members of council. Any questions, comments? So Kendra,
Yes.
That was a Cole's Notes version of
Yes.
your ask.
Mm-hmm.
So this position, what are they going to be exactly doing?
So it would be an assistant librarian position. They would have professional oversight. They would also have, they would be a part of program development. They would be a part of community engagement, and eventually having that MLIS compliance that we need when we hit 10,000 for our population.
And what kind of resume do they have to have? Like what kind of education for something like that?
Masters of Library and Information Science.
Okay, thank you. Councillor Avery has a question.
Thank you, Mayor. Thank you for your presentation. And I can appreciate the increase in people attending the library. Do we know the percentage of town versus county that are coming in?
Yeah.
Okay.
So our library memberships, 87% of them are from the town, and about 13% are from the county.
And does the county contribute any funding towards the library?
Yes, they do. So the county residents, they do pay for their yearly membership, whereas town residents, they enjoy a free library card. And also the county contributes to the rural grant services, and that is split between us and Picture Butte.
And will the county be contributing to this position at all?
What they contributed last year was around 37,000.
Thank you. Any further questions, comments for our presenters? Well, thank you very much. Deputy Mayor Beekman speaks highly of your team, so we appreciate everything you do.
Thank you. Appreciate it.
You're free to go.
Thank you.
So back to our 2026 to 2028 operating budget. We have our Chief Financial Officer, Tim Koba, presenting. And Tim, whenever you're ready.
Okay, thank you, Mayor Van Rijn, and welcome, Council. So tonight's meeting is meeting number 2 of 3 that we have scheduled for the operating budget deliberations. Now this presentation, I will start off by kind of summarizing summarizing some of the kind of like the reasons for this budget in front of you today, as well as our budgeting approach to get to what you see in front of you. There will be a lot of information, so please feel free to just stop me and ask if you have any questions along the way. I guess the information, I do have 2 separate, PDF documents that have been attached for the draft operating budget, and I will be jumping back and forth between the 2. Now, the first 2 slides that you see in the budget presentation, these are all points that are covered in the cover letter that's attached to the draft operating budget. These are items that I will speak to individually as we go through kind of like the overall summary of the 2026 budget, 2026 to 28 budget. So these first 2 slides, I'm just going to real quick skip through those ones. And I think it's kind of important to maybe go through our budgeting approach first, so that council has an understanding of, the reasons why we did the budget the way we did, and sort of just to let council know that we kept in mind council's objectives in their strategic, what they wanted to see from the town, and kind of what their expectations were for 2026. Now, just to clarify, this budget is mainly focused on 2026. When we approach departments for their asks, we ask them to focus mainly on 26. There are some numbers that we have budgeted out 27 and 28 for growth, and there are certain agreements that go up, and so those have been reflected, and I'll make it very clear which items those are. And like I said, again, if you have questions, feel free to stop me. So the 26 to 28 operating budget, we first met in October, November with each department to get an idea of what their requests would be for 2026. What I did first is, we worked in those requests based on sort of the data that the previous CFO had populated, for 26 and 27 when he prepared last year's budget. However, in order to get, and he did an excellent job at projecting out, making sure things were included, and we were prepared for the future by setting aside, transfers to capital reserves and making sure that utilities were self-supported and taxes were funding ongoing expenses. However, for myself, and being new to this role, my first year presenting an operating budget, we really wanted to get a really good understanding. So to get a base level understanding of, what services we are providing, what costs are there. And then as well, along the way, we also, I also looked at what the allocations were, and we did adjust allocations kind of across the board. So you might notice that some expenses might jump, some might go down significantly, but that's just due to a change in the allocations. So there are some categories such as salaries and wages, natural gas and power, municipal utilities, debentures, bank charges and interest, and insurance, for example, that affect the whole organization. And the way that the previous CFO had those allocated out, I may have made some tweaks, but overall, I can tell you kind of what the increases are across those specific items. And then there are items that departments have, more discretion over. So I would be talking about things like contracted services, purchases of supplies, materials, construction materials. And those items, that's where we met with the departments and went through line by line to figure out, are these where they should be? Should we increase certain amounts, decrease certain amounts? And it was we did have more meetings in 2026. So those are follow-up meetings in January, February, to get to the budget that you see in front of you today. So it is kind of a reworked from the ground up for a lot of items. There's a lot of allocation changes. However, I think the main message or the main goal of this budget was to present something to council that was, that gave us an understanding of the town's operations and to provide a budget that didn't impact residents or that had a 0% residential tax increase for at least the 2026 year. And that was important because of a few items. As council is aware, we approved a utility rate bylaw that had utility rate increases that we weren't expecting. There is a rates and fees bylaw that went through first reading, but that one also has some slight increases in it. So, considering everything, we wanted to take an approach that would soften the impact to residents. We don't want to see someone come in and then see sudden increases across the board. So we did look very carefully at all of our projections for both revenue and for expenses. We went line by line, making sure that one-time costs that were in 2025 were not being carried forward, so there weren't any duplicates. And then, one of the principles that we kind of followed, and one that we carry forward from the previous CFO, is to ensure that we're not relying on surplus funds to fund annual costs. So that's a big one. If ongoing costs are going up, they should be funded through ongoing revenues. And it took a bit of work, and it also required a little bit of work on getting the year end caught up. So there was a period in January where we did have to get November and December numbers kind of as best we could. We still have the year end that needs to be well, the file needs to get to the auditors by the end of this week, so it is still in progress. So the numbers that I'm reporting here on 2025 actual are unaudited, and those numbers are, well, they will change. However, I tried to reflect as best I could what those changes would be. So on this slide here that we're on, I'll kind of just go through some of those items. We are projecting at least a surplus of about $325,000. We've allocated those surplus funds to kind of sort of cover. Now we passed the 2026 to 2030 capital budget, and there was one item in there for the library roof replacement for $13,000 that we said would be funded through surplus. So we do have a surplus, so that is in there right there. Just one note to make is that the library board is also contributing 50% of the cost of that renovation or that roof replacement. Some of the other items that are coming out of surplus to fund the 2026 one-time expenses would be $16,000 for council expenses, $26,000 for additional costs related to upfront costs related to training new CPOs. We've allocated $60,000 for downtown area restructure plan and supporting studies. Now that item there is a possibility that we could get grant funding for that one. However, we can't budget for things that we aren't sure we're receiving, and operating grants are one of those. And then we also allocated $60,000 towards the wage contingency. That is an operating reserve that's set up to cover, one-time fluctuations in wages based on events in the year. So there's currently $40,000 in that reserve. So we would add $60,000, and that is there to be able to draw from if, based on events in 2026. Or if we don't need those funds, they can be used in future years as well. But we've set aside $60,000 for that. And then obviously these are items that council would have approval over, but we're just trying to kind of project out what might be needed in 2026, what might be needed even beyond that. So the last item there is $150,000 set aside for landscaping at Centennial Park, which would likely be a capital item. But I've included that there just to kind of give you a full picture and to kind of tie that into the first page in the operating budget that you'll see after the cover letter. The goal was throughout this process to get a good idea of 2026 to 28, focusing mainly on 2026. And again, we want to make sure that we're not, borrowing from the future to make 2026 work. So one of the main things that I looked at was, how is our transfers to capital reserves being impacted by a lot of the changes that we made? So,
Councillor Avery has a question.
Yeah.
Okay, thank you, Mayor. Thanks, Tim. This presentation has now tweaked something for me, and maybe the CAO has the answer. But so why are we asking the library board to contribute 50% of maintenance on a building that belongs to the town? We don't ask that from any other not-for-profit or other organizations that are using town facilities to pay for repairs, i.e. the hub. I don't see anything in there where we're asking that organization to pay for roof repairs. So I'm just wondering why we're not budgeting fully for this and asking the library board to contribute.
Maybe the CEO has a better response than I do, but I do believe that as far as municipalities and funding libraries go, the town of Coaldale does fund a lot more than other municipalities typically do. I don't know if that's correct or not, so maybe. I think Russ might have an idea here.
Thank you. Thank you for the question. It's a good question. And I don't have what funding it would be in front of me. I don't have that information. But oftentimes when we're dealing with these third parties and especially not-profit organizations, they have access to funding. Sometimes we don't. And so we sometimes partner with them on whether it's grants and things like that. And I don't know where this money particular is coming from. We can look into that, but I would anticipate that it's a funding source like that. You bet.
Deputy Mayor Beekman.
Thank you, Mayor, and through to Tim and Russ. Just on that note, the board the roof has been a concern of ours for the last few years. We had financial uncertainty within the board, knowing that we had to contribute 50%, and I was myself curious about that. So I appreciate Councillor Avery asking that question. Was the year that we finally had certainty with what our board budget was, that we could go forward with that. So I know we've been held up because of what our contribution has been. So it's a very good question as to why it was contingent on the board. So that just a comment. Thank you.
Okay. Yep. Thank you for the question. And this is definitely one of those items that we don't have to have an answer for right away. These are items, surplus items are, a discussion that we'll have when the draft financial statements are prepared. I'm expecting them closer to the end of April. So we do have some time to, look at what the actual surplus figure is, and then maybe there isn't a need for the library board contribution there, and that is a decision that council can make at that time. Yeah. Okay, so I just wanted to kind of go through our budgeting approach for this year, just so you kind of understood what our goals were, what we are trying to achieve with the 2026 operating budget. With that, I'll kind of just jump into the beginning of the draft operating budget. Now, there is a cover letter attached. I'll kind of go through some of the key points here so that, because this kind of feeds into the the first page of the operating draft budget. Now, the 2026 fiscal year has been balanced, and it does assume a 0% net increase to residential property taxes. Meanwhile, the tax rate for non-residential properties we have it set to remain static at $10 for every $1,000 in assessed value, or at a mill rate of 10, which we have done the past couple of years. Fiscal years 2027 and 2028, which can be evaluated as part of next year's budget. They have also been balanced as well, but there are some key items in 27 and 28 that council should kind of keep in mind as we, as we also look through 2026. Some of the key items that I would like to highlight before we get into the budget are that, a lot of the elements of this budget were reworked. So we rather than relying on, the previous CFO's data and his assumptions that he may have had when developing the budget, we kind of, it was important for myself personally to really understand where these numbers are coming from, and so it did take a little bit more work to actually go back to the source, right? To take, for example, for property taxes, we need to update those annually, and we get assessment values from our assessor, and then we use those estimates to kind of project out. So it was important to kind of go through all of that for each of the different areas. I will say that as far as time management and where I focus most of my time, it would relate back to the first presentation on February 9th, where we kind of looked at sort of those three or four largest revenue items, right? You have taxes, utilities, rates and fees, and then you also have franchise fees. And so I did make sure I spent more of my time in those larger areas so that I was to develop more confidence in what the numbers were. So for revenue forecasts, supplemental tax revenues, we did look at building permit value, subdivision fees, the growth, and we adjusted those rather than just carrying forward, a 3% increase or 5% increase, or we tried to really get an understanding of those revenue items. The town is in a growth phase. I was curious, so last night I did look at when I first started at the town in 2018. Previous to that, I worked at an accounting firm where I was also the auditor of the town of Coaldale. So I was curious. I looked at 2015 financial statements very quickly, and it was interesting to see that in 2015, the town of Coaldale budgeted $13 million for revenues. So that was an interesting number. Wages were about $4.5 million, and so. Yeah, it was pretty amazing to see the amount of growth that has happened in 10 years. So, and I think based on the data that we're looking at, the town is still growing, and so will the revenues associated with growth, user fees, franchise fees, consumption, assessment values. All of these help balance some of the offsetting impact that you see in corresponding revenue or rising expenses. So, we looked at various benchmarking or comparisons in the first meeting, wages as a percent of tax revenue. We looked at, what are your contracted services and other major categories as a percentage of your total revenues. That all helps us to achieve balance. So growth helps offset some of those increases that you have in year-over-year costs. As far as tax assessments go, we are provided with actual assessment numbers. And the fact that the numbers that we received in November, December were a little bit different than the numbers that we received in February, but we made sure to use the most updated forecasts in our numbers. Now this next part, until that fees and rates bylaw is passed, there is a 2% increase. It won't have a huge impact on the budget. So regardless of whether that it changes, I don't believe it will impact what you see in front of you for 2026. Expenses were adjusted based on known events as of February 20th to enhance precision and accuracy. So a few of those items, we had a full year of costs for, natural gas, electricity. We received the 2026 invoices for insurance. So those are actual numbers. The only projections within, say, for example, insurance and some of the utilities is that, we have new facilities that will be coming online in 2026. So that includes the potable water reservoir, as well as the stormwater management facility. And then for insurance purposes, we do still need to look into some items, but there are more assets coming online that we need to forecast for. So there is a slight increase in insurance across the board, and that is a reason for that. Now, as I mentioned earlier, we monitor the transfer to capital reserves because you almost want to see that increase year over year to prepare for, you're growing your assets, you're investing more in your capital assets. I worked on the annual report for the last 5 years, and one comment that I make in there is that the town of Coaldale has been investing more than $15 million a year in its tangible capital assets. So as that number grows, so should the amount that you put away for reserves and for being prepared for, operating costs, life cycle costs, unexpected costs. So we used a zero-based budgeting approach for many of the line items. You'll see that there's going to be several allocation changes. One, for example, is insurance. Insurance has kind of gone up across the board. Facilities are the way the previous CFO had allocated is slightly different than the way I had allocated, but it doesn't. If you look at it as an overall basis, that should hopefully explain why in some departments you might see insurance go up, but in others it goes down. And so that is one of those allocation changes, along with wages. So wages and salaries, I believe we touch on it. Oh, maybe not. So yeah, wages and salaries is one of those organization-wide items that we looked at and built from the ground up. I have Ashley Crabb to thank for her help in that. It was a lot of work to get the full list of employees, project out, benefits, deductions, all of that across the board for the whole organization. But that has been worked into the 2026, and then with based on the new collective agreement and cost of living increases, that is one item where we have tried to project out. Maybe not new positions for 27 or 28, but at least for cost of living, we have a good base and an understanding of those numbers for 2026. Two of the most significant drivers behind the increase in the 2026 operating budget revenues and expenses compared to fiscal year 2025 are, so number one would be the cost of the town's potable water utilities. So whereas our consumption charges went up as a result of changes made by the city effective January 1st, 2026, so did the revenues as a result of those changes. When I ran those numbers, I tried to account for the fact that if you increase the rates for consumption, residents might respond by not using as much water. So I didn't project too large of an increase in consumption. And then as well, I did note that we are making those rate changes effective as of April 1st. So I did adjust that as well. For the revenue side. And then along with the water rate charges, municipal facilities also use water. So those charges had to go up. And so when you see the municipal utility line item, that is our cost of water going up as a result of these rates going up. A close second in terms of relative impact on the town's budget is the growth of the town's non-residential assessment base. However, much of that revenue associated with assessment growth, it will not be available or accessible in fiscal years 26, 27, and 28 due to the town's industrial park incentive strategy. So while you see the revenues go up significantly on the revenue side, it's actually with the incentive, you will not recognize or be able to utilize those revenues until that incentive program expires. A portion of the town's 2025 surplus, which we can't finalize until after our year end is complete, although we are getting there. We made sure that the surplus was only used for one-time expenses unique to fiscal year 2026. We didn't use estimated surplus amounts to balance the budget or to fund ongoing expenditures. This enabled us to build in expenses without needing to rely on any tax support in 2026 to do so. The proposed one-time expenses I've listed out and summarized in the first 2 pages of the budget presentation. And I will be going through each of those, or I kind of have been as well. But they are subject to council's approval. So if you any of those one-time increases or expenses that you note, please feel free to ask questions on any of those as they come up. Whether or not those items are approved or not should not affect the bottom line. or the amount of tax support required to balance the budget. Alternatively, council can table some or all of these expenses until after the fiscal year is audited and complete. So until we have a final audited surplus number, we can wait to approve those, and that includes that library amount that we had set aside. So again, I kind of went through this already, but we had set aside one-time costs for training new CPOs, the downtown revitalization study, the roof replacement, landscaping, council chambers, and then asset management software for 2027. So that will be a big focus moving forward. We likely don't have capacity in 2026 to start any of that. However, asset management software will be a big help in being able to create scenarios, plug in life cycle costs, and find out optimal kind of maintenance strategies across all of our classes of assets. It's something that you just can't simply do in an Excel spreadsheet. For debentures, interest-only payments, this is related to the acquisition of water rights. Now, water rights are a valuable asset, intangible asset. They go up in value. There is an opportunity to purchase water rights. We have budgeted in this 2026-28 budget a 5-year interest-only loan. Like I mentioned earlier, we do have some revenue items from the incentive program that will be available further on down the line, and so I would the recommendation here is to finance that now and then wait for the future growth revenues to come in to be able to fund that into the future. Okay, so new items. The draft 2026 operating budget includes a few new items, some that were previously discussed at the most recent strategic planning retreat of council. Built into the 2026 budget is $100,000 per year placed into a reserve for a future, though unspecified, recreational project. 25,000 capital reserve starting in 2027 for the town's rail spur. Now that is a new asset. However, it's good to kind of start building up a reserve for that for unexpected life cycle costs or unexpected costs that come up as this is fairly new for the town. There is $10,000 per year that's built in for replacing the fire equipment that's used by the fire academy. And the last item I have here is an assistant library position that was presented earlier by the Coaldale Library Board. Future considerations. So the total amount of funds that we have set aside as transferred into capital reserves for 2026 is just over $2.2 million. That's not including amounts set aside to capital for ongoing programs. For example, that doesn't include the $500,000 for the roads program, $200,000 for the sewer relining, or amounts that need to come out of current operating revenues to fund current capital items. This is future funds set aside for future purposes. However, like I mentioned earlier, the number of assets owned by the town only continues to grow. And so does the age of our existing assets. While year-over-year increases represent a positive starting point, looking ahead, the focus of 2027 will be the development of a more robust and data-driven asset management plan and a reserve strategy that will allow council to establish longer-range goals, look at developing longer-range goals and financial projections and statements, and to be able to identify those replacements that are coming down the line and to be able to prioritize those based on what council determines is critical. In the event that council wishes to amend or reduce the newly identified capital reserve allocations that I've noted, administration's recommendation is to reallocate those to other reserves rather than to use them for, other expenses. With that summarizes some of the key points of the budget. Now, I hope you brought your magnifying glass. There was no way to really, I guess I could have tried to split this out. What I will do is kind of summarize this page quickly. So this is the 2026 to 28 budget, but slotted in there are kind of our best estimate for 2025 unaudited numbers. So you can kind of see where, what did we project or budget for 2025? Where do we think we'll be? And an explanation of some of those differences. So, and I included 2024 column there. That's 2024 budget, just so you can see the incremental growth, even from 2024 to 25 was a pretty significant jump. And then you can see from 25 to 26, there's also another significant jump. And I'll try my best to kind of explain the reasons why. So I really like how this is broken out, because rather than looking at department by department, just as a note, I did include department by department, budget line by budget line information in an attempt to be transparent, show the work, show how everything balances out. However, this slide here kind of shows you from the high-level view of our organization. What are our sources of revenue? What are those major sources that council can adjust to sort of get the balance or get the budget to balance? And so revenues are broken out by type as well as expenses. So you can see year over year, what are we budgeting for, salaries as a whole for the town, contracted services, everything else. What are our principal debt repayments and interest look like? And then as well, what are we budgeting for reserves year over year, or transfers to reserves? So okay, so I won't get too ahead of myself. Starting with taxes, you can see 16.8. These are now the assessment or tax numbers are driven by the numbers that we receive from our assessors. So they give us numbers showing us what is expected for residential and non-residential properties. We take those estimates. We use just use 2025 mill rate, adjusted for inflation if we do, and then come up with an estimate for the growth in tax revenue. So you can see last year, we budgeted for 16.8 million, came in at 16.6. So it didn't quite reach the assessor's estimates, but we know from the development figures and the data that's provided from that department, we do know that, that revenue is coming down the line. It's just sometimes it takes a little bit longer than what you might think. But 2026, we use the assessor's numbers that are received in mid-February. And with that, and this number here, so the jump from, the actual of 16.6 million to 18.37, that is mainly due to simply growth. There's no increased taxes on the residential side. For non-residential, like I said, we kept the mill rate at 10, so that is includes inflation in that number. But yeah, this is simply due to growth. It's important to note that these revenue numbers include the amounts that we collect for provincial education requisitions and for Green Acres. So that number from that 18.377 projected, the provincial requisition numbers are down here. So, if with that increase, I believe education is about 2.6 or 2.7, and then Green Acres was 0.13 or something last year. So just under 3 as a mill rate for the requisitions. And then we know from the previous presentations that The residential mill rate is about 6.9 last year. If we factor out inflation, it falls to about 6.2. So I'll kind of just hop around a little bit, but I hope this is okay. So again, here's residential, non-residential assessment growth from 2022 to 2026. You can see over the 5 years, non-residential assessments have gone up 128%. Residential assessments gone up by 35%. And there is a census for 2026, but however, these numbers come from the Alberta Regional Dashboard. Population from 2021 to 2025 has gone up 6.29%. Okay, so we are still growing. And then here's the split in the residential versus non-residential tax revenue from as far back as 2016. And you can see now we are closer to, if I included 2026, we'd probably be closer to 70-30 there. Okay, so what does our mill rate look like as a result of, these are 2025 figures. This is the benchmark provided in the first operating budget presentation. Coaldale with the recreation tax, we are, somewhere we are above average, but under Lethbridge, Black Falls, slightly above Tabor if you include that recreation tax, and with a mill rate of 6.902. When you factor out inflation of 2026, you get down to a mill rate of 6.26 now. Okay, so I've just kind of provided these numbers for council's reference. Right now, the budget for 26 to 28 assumes no residential tax increase, but if council did implement a 1% tax increase, this is the impact to the mill rate. This is the impact to the municipal portion of taxes. And then this is the dollar impact that based on the dollar value of the home. The next slide will kind of show if your tax bill was, this is just the municipal portion of tax. Again, it doesn't include the requisitions. But a property of $350,000 would have a municipal tax bill of 2.5 or 2,500, 2,536. If there was a 1% increase, that would be the impact. And then you can see that for all across the scale there, from a 1 to 3% increase. Okay. As long as we're talking about taxes, I think it's important to kind of talk about.
We just have a question from Councillor Reese.
Thank you, Mayor Van Rijn. Through Tim. Thank you for your report. It's really good so far. Just one question. With the provincial education tax, last year it went up quite a bit. And so I'm just curious, what if it goes up quite a bit again this coming year or next year and it's not accounted for? Or have you accounted for that possibility?
Great question. What I did for the requisitions in the draft budget is I just assumed 2025 numbers. So since we don't know what those numbers are yet, and I believe the property tax bylaw is something that's set by council in April, May. So we can look at what those changes are and then maybe we can make some adjustments then. But for now, I just assumed that it would stay the same. Okay, so if we're talking about residential or just taxes in general, I think it's important before discussing any tax increases, you get a full picture. So, we raised utility rates, for storm, water, sewer, garbage. And then there is a proposed user rates and fees bylaw that does propose a 2% increase, more or less 2% across the board. But what does that look like on the, I guess, on the other side? Typically taxes are due on June 30th of each year. But how many people at the end of the year, December 31st, what are those arrears balances? So you can see after backing out significant one-time accounts receivable amounts that were transferred to tax, you kind of sort of get an idea of what the changes are year over year. So you can see that the arrears balance is up slightly from, well, it does jump a bit from 24 to 25 compared to the recent trend, which was actually kind of dipping a little bit. However, this is one of those indicators that we can monitor moving forward. What does a 1% tax increase do to this number? It might not be perfect, but it's a useful measurement that we can look at. And so that's kind of, when we looked at 2026, like I said, we used assessor's estimates. For 2027, I believe the growth estimate that we used for 2026 was 4.25%. So that's based on, kind of what we assumed would happen from new developments coming online. 2027 and 2028, we did reduce that down to about 3.25% increase in residential growth, or I guess that would be combined growth. So, we do project, it's not as big of a jump from 25 to 26, but we did factor in some growth in tax revenue for 27 and 28. And that was kind of done as a way to balance out all 3 years. And like I mentioned earlier, taxes and utilities and rates and fees, franchise fees, those are some of the bigger ticket items that we really wanted to focus more time on. So we did factor in increases in those areas. So the next item is sales and user charges. Now this, of this 7.5 million, I would say that maybe just over 6 and maybe 6.5 million is related to utilities, right? So the remaining 1 to 1.5 million is your revenue from facilities, rentals, general sales, and so you can see that we budgeted just under 7.5, and we came in at so right now just over 7.5. So okay, so they came in a little bit low, they came in and there are a lot of different offsetting things that happen in the year. Just to give you an idea, across these different categories, we're looking at about over 900 budget lines. So budget, that might not necessarily mean that's the number of accounts, but there are a lot of different accounts that make up these numbers. So you're going to see offsetting amounts. You're going to see increases in some facilities, decreases in other facilities, but in general, for user fees, they came in about 124,000 lower than expected, and that was offset by utility revenue. That was due to just population growth. And one indicator of that is that water meter fees, we typically budgeted at 50,000, but they came in at 135,000. So that's kind of like new requests for installation of new water meters. So with that data, we kind of increased, a large portion of the increase that you see from 25 to 26 is due to the water consumption rates. We did have to increase them to cover the costs of the utility rates, consumption rates going up. So that's about 670,000 increase. But then also on the expense side, you can see that I've made a comment here that, water purchases goes up significantly as well, which offsets that revenue. We also look at, when we look at these numbers and these accounts, we look at the past 5 years. So 2022, 23, 24, and 25. I guess that would include 21 as well. To kind of get, to sort of also help form our estimate for 2026. Next line item, we have licenses, permits, and fees. So you can see here we budgeted 277,000 in 2025. They came in at just under 346,000. So that increase, when I look at the individual accounts that make up licenses, permits, and fees, there are just increases across the board. So, we have to assume that that's due to growth. And a significant portion of that actually is related to possibly one development. So we need to make sure that when we develop our estimate for 2026, we back out kind of those significant items that you shouldn't expect to see year over year. But we did project an increase of about 28,000 from 2025. Next item here is interest, penalties, and fines. Now this includes revenues from photo radar, for example, when that was a program. This includes late fees on taxes and utilities. You can see we budgeted 170,000, but they came in at 390, mainly because of residual photo radar income that we started to see. Even though we ended the program, we were still receiving photo radar income into, I would say, about September, October, and now they've kind of leveled off. So our estimate is that its photo radar income was above 140,000, and then there was an increase of about 80,000 in interest and penalties. And that sort of also ties into that arrears balance chart that I showed you as well. So for 2026, we did increase those for interest, penalties, and fines. We did increase from what we budgeted in 2025 to by about 94,000. Making sure that we didn't include any photo radar income again in 2026. However, we also factored in that with the addition of new CPOs that there would be some fine revenue expected in bylaw as well. Long-term contracts and asset returns, that is mainly franchise fees and investment income. So franchise fees makes up about 1.75 million of that 2.15. And that number will grow with growth. New accounts, more consumption could impact it as well. However, our investment income, we can't. We kept that pretty consistent, or we didn't increase that as much, just due to we have a lot of projects happening. There will be a lot of cash outflows related to those. We have debentures, and until we start, building back up our reserves, reducing that. So with that, we budgeted for a slight increase in franchise fees, and as the comment says, we're just projecting that it should stay consistent with 25. The next line item is other revenue. Now this is just rebates, donations. Not something that you can easily budget. You shouldn't really budget for donations. However, if you increase programming and part of that programming is to solicit for more donations, we do project out a little bit of an increase, and that's what that 15,000 increase, that is due to community services increased programming. Next item is government transfers revenue. This is money that mainly operating grants, so that would include your 550,000 for the policing, plus the 370,000 additional for so the 550 would be the equity portion, and then 370 would be the police support grant. Also included are transfers from other municipalities or from regional agreements. Yes.
Yeah, thank you, Mayor. Through to Tim, just on that line, that there are transfers from government, would that include the local government, what's called the LGFF acronym, local government facility?
Yes.
The operating side.
That is one grant that we do budget for. And yes, it is the LGFF, Local Government Fiscal Framework Grant. The operating side of it, which is about 131,000.
How much is that?
131,000.
Okay.
So yes, and then there are also in there library grants and Yeah, operating grants are a little bit harder to predict for because you apply for them, you don't know if you'll get them, and then you shouldn't really budget for a grant if you haven't applied for it yet either. So, so you can see that there is a decrease projected for 2026 of approximately 168,000. A major portion of that is due to the new emergency services agreement that was signed there. The transfers from reserves. Now, this is an internal reserve transfer. It's bringing in money from your reserve accounts into your operating revenues to help offset, those one-time items. It always depends on what council has approved as far as transferring to reserves, and then now these are amounts coming from reserves. So. For 2026, that amount is $355,000, and I believe that is due to sort of these items here. So the council one-time expenses for one-time CPO training costs, the downtown ARP study, and then also in there are amounts that we transferred to reserves in prior years. So I believe in 2024, we transferred some money into reserves to help offset the costs for one-time costs related to the ERP transfer. So we're also in the process of switching accounting systems right now. And so there are still costs carried forward into 2026 for that, which we are budgeting to bring into reserves. So that also makes up part of that 355,000 you see there. So that covers the revenue side. When we look at expenses, the first and biggest item there is salaries, wages, and benefits. So 2025 we have budgeted $8.5 million. And it came in at 8.7, so just 164,000 over. Now there are a lot of offsetting amounts here. There were staff, a lot of staffing changes. There were some additions, most of which were budgeted for. However, that can be. That number might also not be finalized as well, so I don't want to speak too much on that. That could be a 2025 financial statement, draft financial statement discussion item. For 2026, what we've done is as I mentioned, we took the 2026, the current employee lists, the current grids, the current benefit rates, all of the deductions, everything, and calculated out from the ground up and just slot that in for 2026. The increase from 2025, you can see, is 360,000. Now, a big portion of to the new collective agreement that was signed, so that was a 3% increase for cost of living. As well as net full-time equivalent addition. So new budget requests for new staffing. So the assistant librarian would be one of those. There are a lot of offsetting amounts in that as well. However, the net increase or the net impact is 360,000. And from the first budget meeting, 240,000-ish or 240-ish would be related to just basic cost of living increases that weren't budgeted or that needed to be budgeted in. Contracted and general services is next. Now, when I look at these items, sometimes I look at them separately. Included in contract and general services is, the cost of our CMP, which is $2.6 million right now, budgeted in there. So that's included in that 6.5. Materials, goods, and supplies would be, include like your water purchases, right? So we kind of look at it a few different ways. We look at it as a whole. We back out some of those items that are based on agreements, costs that really departments have no control over in a sense, just because recycling, garbage, all of those fees, tipping fees come out of materials, goods, and supplies as well. So when we back that all out, you get a number close to $3.5 million, and that would kind of be like your discretionary, what the departments have across the organization to spend on contract and general services and materials, goods, and supplies. The rest of the line items here below that are really those items that I did spend a lot of time on, because those are items that, for example, debenture payments. You can easily project out what your debenture payments and your financing costs are based on what your current debentures are and expected debentures are going to be. So those numbers are pretty. And also, there is no discretionary, payments that come out of there. So as long as we don't add new debentures or choose to pay off debentures early, like those numbers are fairly easy to project out into 27 and 28. But back to contracted services. So 2025, we had budgeted, I believe it was $2.365 million for RCMP. It actually came in closer to 2.5, or roughly 170,000 higher than expected. I did just submit the RCMP report today for our continued funding through the equity grant provided by the province. So that amount is kind of fixed at $550,000 for 2026 anyways. But that is, and then I used the forecast provided by RCMP to develop those expenses out to.
And we have Councillor Chapman has a question.
Yeah, thank you, Mayor. Tim, just two questions. One on regarding the RCMP contract. We have no control over the numbers, over their requisition. And I see that number is going up by approximately 100,000 every year. So obviously that's something we have no control over, just for council's interest. The second thing I wanted to point out regarding debentures, you and your team would be able to have a really good handle moving forward as to paying off some of those debentures sooner than later, considering some of the interest rates that might be out there, or if they're locked in. I guess you have no control, but you would have a pretty good handle on how those debentures could be paid off.
Yeah, so the nice thing is last year, the previous CFO had arranged to have a number of debentures paid off maybe 1 or 2 years early. Now, typically, if you repay a debenture early, there are penalties to do so. However, if they're sitting at higher interest rates and you have, you're projecting more additional debentures down the line at better rates, sometimes it is a better decision to pay those off early. So, yes, yeah.
Thank you.
And then regarding the RCMP costs, you're correct. We have no say over, if they implement new body camera system or EV for, I don't know, across the board, that type of thing. I think we can't set the number of established positions. However, you'll see in this graph here, what I've assumed for the budget for 26, 27, and 28 is, after looking at prior years and the utilization, net member utilization, it's kind of hovered between 80 to 90-ish%. So those are the numbers that I used. I didn't want to go too far lower, just because I think we have been burned in the past. And as well, we received a letter from the RCMP regarding a 3.5% projected retro that would go back to April 1st of 2025. So there is an additional amount for 2026 for RCMP to sort of cover that, and as well any adjustments that might come out of, because I've noticed every period the forecast changes just a little bit. So it's, yeah. So that was RCMP. ERP transition. We paid the first $75,000 implementation charge in 2025. The second half of that will be due in 2026. But like I mentioned before, that is an amount that we do have reserves for. Oh, so that's over here. So included in that 355 is 75,000 for one-time implementation, or the last half of that implementation, as well as 50,000 for the sort of, the period of time where you need to pay for both systems. So that's for our old system. So there's about 125,000 from reserves out of that 355 that is related to the transition of accounting. But that was, forecasted out by the previous CFO in 2024. Now, there are other professional contracted services that increased due to collective agreement bargaining. I made sure not to include those costs when we looked at budgeting in for 2026. So therefore, you see the increase from 25 to 26 is 6% or 373,000. Now, the big portion of that is, as I just showed you in the previous chart, it's the RCMP increase. We're projecting 266. That includes the 57,000 that I've budgeted for the retroactive pay of 3.5%. The remaining 106,000 would be due to the revival of the public safety department, the 60,000 for the downtown study, and then there were some other minor changes in new budget requests. For example, one of them would be in police. There's an increase from 10,000 to 17,500. That's the citizens on patrol covering the vehicle maintenance costs. For materials, goods, and supplies, when we look at 25 actual or unaudited actual to 2025 budgeted, the difference there was mainly due to water consumption was higher than estimated. I believe there were a couple of main breaks that were unexpected, and I believe they were sort of in the similar area. But those are all offset by lower operation spend, especially due to a lot of the uncertainties in 2025, in the tail end of 2025 there. But when we budget for 2026, there is an increase of 15%, and that is mainly due to, that would be for the water consumption. So there, 673 increase in the revenue side, 640,000 increase on the expense side as well. You need to factor in that each facility also uses water as well, so those need to go up. And so there, as I mentioned earlier, we did go through with each department, went through line by line, looked at the past 5 years, looked at areas where we could possibly reallocate, or maybe just based on historical trends, we don't need that budget allocation there. This is one of those areas where we were able to make those to get the 2026 to 28 budget balanced. Next item, bank charge and interest. This one it's a very small item, but it goes up by a significant amount. This is just bank charges and interest. So that relates to our debit terminals, our authorized.net online payment portal. There are fees associated with accepting credit card transactions. Just so council is aware, we do not allow credit card transactions at the office. So we do not accept credit cards for taxes, utilities, business licenses, development permits, unless they choose to pay online through our website, where we use PaySimply, but PaySimply adds on an administrative fee to cover that on their end. And we just receive the payment. However, recreation fees, they can be paid online through credit card, and those are, we should have, well, this is one of those items where it is a smaller item, but we should try and reflect for what we actually are seeing. as far as transaction volumes. And so you'll see that for 26, we've just allocated 25,000 there. Principal debt repayments, I don't think I need to go into that any deeper. There's no changes since the first operating budget presentation where we went through the list of current debentures and the ones coming online in 2026. This does include like I said, the financing costs for the water rights purchase that we're projecting. I believe in 2026, I budgeted 60,000, and then in 2027, 75,000, just to make sure that just because this isn't a debenture that we can get through the province, it has to be a debenture that we get through like a major bank, for example. So we might not get the types of rates that we could at through the loans to local authorities. Other expenses. Now this includes tax write-offs that would be for volunteer firefighters as well as for the tax incentive program. Now this, you can see the 2025 actual, we will only be writing off 550,000, and part of that is because we received a payment in advance of taxes outside of that incentive program. But until that 2025 year end is finalized, we won't be able to see what but the reason why that number is increasing for 2026 is due to just the inflation. So as I mentioned earlier, for non-residential portion or non-residential taxes, we don't factor out inflation in calculating the mill rate when we keep it at 10, which is half of Lethbridge, for example. So that's the only change was just based on the incentive program, those properties going up in value. As far as the next line item, government transfers expense. Now this is going to be transfers that the town of Coaldale makes to other organizations, other municipalities. One of the reasons for the over budget, we budgeted 4.6 and came in at 4.867. One major item there is the 205,000 for the horsefly spillway. That was an item that came up kind of midway through the year. Council probably remembers that had to come out of reserves, but it's a transfer that we made, and that's where it hit the expenses. As far as the 2026 budget, as I mentioned earlier, we kept provincial education and Green Acres requisition mill rates the same as they were in 2025, and we can revisit that in the spring with the property tax bylaw. Although I did factor in for the growth, right? So if we are expecting growth on the tax side, we should also expect a growth on the requisition side. So I just have a small note there, decreasing the residential mill rates. If requisitions go up, you'll start seeing less taxes available for municipal purposes. And then the last line there is transfers to reserves. Now this is where, I kept a close eye on, and this is the last area I would touch when it came to preparing the 2026 to 2028 budget, because this line item includes what we budget for reserves at the end of the year for capital, future capital, current capital projects, and also for operating. So that that 3 million isn't all transfers to capital reserves. As I mentioned, we put money away for ongoing programs, as well as that also includes transfers to operating reserves for future years. So with that, we get to a bottom figure, which is balanced without relying on any tax increases for residential, and factoring in growth, making adjustments across the board for salaries and wages, making certain cuts in areas where they might not be needed, but then also increasing where we know for a fact that we need to budget more. we tried to capture as much as possible, but budgeting isn't a perfect science. But we are pretty comfortable with presenting this budget that is balanced without a request for a tax increase. And then although 27 and 28 are balanced, a few things I will note is that, yes, for some revenue items, we projected growth. So taxes, we projected 3.25%, 3.25%. Utilities, just sort of like I believe, like a 3%, maybe not the same as the growth in tax, but there is a growth factored in for rates, utilities, and other fees. And then license permits and fees, you can see smaller increases there. Franchise fees. So this is one area where I would say you should expect growth. I just didn't budget those in, but there are, like I said, it is balanced currently without that. And then you'll see on the expense side, not everything goes up either. So, at the end of the day, some of these items will end up offsetting. So if you, just for the sake of transparency, I included the line-by-line budgets for every single department, just to kind of show you where those allocation changes were and where those smaller requests come in. I tried to make a note on each page just to show where the variances occurred year over year. And you might notice, if you look at one, for example, you might notice that the expense side doesn't really change. So this is one of those items where I just want council to be aware, for example, for revenue, we increased where we could, but for certain expense items, they are the same year over year. Now that is because we do allow for a little bit of flexibility within the budget for, those unexpected things that happened. After I looked at, like I said, after I backed out all of the organization-wide sort of fixed charges, we were left with about $3.5 million of, your discretionary. If you allow for about a little bit of contingency, it was no more than 10%. But within these items, it's only a matter of time before, $2,000 in 2025 will not get you the same amount of stuff as in that's 26, but the same amount of money is not going to get you the same things 2 years down the road. So just to be aware, a lot of these discretionary items, I did not increase by any factor. So yeah, But certain expense items that I did increase are wages. I sort of, based on the department and the makeup of each department, I did do anywhere from a 1.5% to a 3% or 6%, actually 1.5% to possibly even a 4 or 5% increase in wages, just based on, are they mostly union staff? Are they exempt? Are they, for example, if a department is all exempt, then I would only increase it 1.5% per year type thing. For expenses, like I said, our CMP is one of the big ones. I've budgeted that out to increase based on the forecast I received. And as I mentioned, I did just, these are the assumptions that I made for net member utilization. Right, keeping it within that 80 to 90% range, I think should be safe. Couple of other slides here that I wanted to mention. There was a $150,000 decrease in the emergency services agreement. However, as you can see in this chart, call volumes aren't going to magically go down as well at the same time. So there's added pressure in that department to keep things. To keep service levels maintained. That is one of the areas council can look at as well.
So Avery has a question for you.
Yeah.
Thanks, Tim. And this question could be for the chief. So I notice our medical calls keep going up and up and up and up. Years back, the province says that was their responsibility. It seems like it's falling back onto our ratepayers again. Is there something we need to do as council to start lobbying to get some extra funding for this type of stuff?
Thank you for the question, Councillor Avery. Yeah, we still see our medical call volumes going up. I would say that our fire has been going up as well. The medical hasn't maybe climbed as drastically as it was at one point, but we are seeing that burden come back again. It'll be a statistic that you guys will see in the year-end report upcoming, but we did have 35 code reds last year, but this year, if memory serves me right, we've already had almost 15 in January and February. So we've seen a lot of ambulances shut down throughout the year this year so far, and a lot of knocking down ambulances to BLS or ambulances covering other communities in the last month or so. So I think there is that ability for more lobbying, either for more supports for fire departments, because they do some of their direct financial supports for us as well, but it's a fairly small amount what we do get out of that.
Okay. Okay, some of the other slides that we may not have touched on. Yeah, we looked at assessment growth, residential, non-residential tax split, the current mill rates in 2025, the potential changes to the mill rate based on tax increases of 1% to 3% and the revenue impact. And then the impact to the resident based on the value of property. We looked at the tax arrears balance. We looked at some of the other factors that may have hit residents in 2026 already or are upcoming. And then we've talked about the budget approach, which was very important to kind of explain before we even went into the budget. So we did that. And now I'm on my final slide. So as I mentioned, the 26 to 28 draft operating budget is currently balanced without any planned increases to the municipal portion of residential taxes outside of growth. And these are the growth assumptions used in 2026, 2027, and 2028. We used 4.35%, 3.25%, and 3.25% for growth. Inflation for residential assessment values in 2026 is estimated by the assessor to be 10.23%. The non-residential property assessment growth is estimated at just under 3% at 2.88 in 2026. And then we did not adjust the mill rate for inflation of 9.3%. There's no changes to the franchise fees for 2026. We didn't project any increases to the franchise fee rates for gas or electricity. And then there's that fees and rates bylaw that, we can pass later, but it won't have any, I can't assume there will be a significant impact to the draft operating budget. However, that is set to come back to council at a later date. Utility rates, we've increased them for 2026 across the board, and then for consumption, to take effect on April 1st for water and bulk sewer. And at this time, there are no projected increases to utility rates that are programmed into the revenues in that budget that we've seen there. So it's just simply growth. We're just kind of being slightly more aggressive in growth. And then as far as capital reserve transfers, as I mentioned earlier, I would like to see some kind of reserve strategy developed for 2027 and as we move forward with asset management. They do decrease slightly from 2026 through to 2028 by about 165,000 or 5%. But again, they're next year, well, when we budget for 2027, that will be in the fall. Even by then, even in the 7 months from now till then, there we'll probably have new assumptions, new lots of things will have probably changed. So that is something that we can, like I said, we keep a close eye on. We don't want to see that amount decrease as we grow our asset base. Is the story.
Yeah, thank you, Mayor. Tim, the rec levy, I know you haven't mentioned it anywhere in here yet, but do you consider that to be a rate as a rate and fee or a tax or a levy?
I believe it's a special tax, and it is included, I believe, in this overall. I might have to.
Yeah, it is. You do show it in there as a 2.14, I think, increase. Which,
yeah.
So when I first read it, I thought, oh, there's an increase, but I think you're using the population or housing growth as the increase for the levies. Am I correct on that?
Yeah, that's correct. We're not setting to increase the rec levy rate. It's just due to growth. We're just kind of adjusting that number.
Second question to you, with regards to these arrears, like that's over $500,000, $560,000 a year. Are we able to collect 100% of that, or is that like, it seems like that number is pretty constant, over $500,000 every year?
So those numbers came from our tax specialist. She does keep a close eye on arrears. There are certain MGA requirements. There are notices that need to be done. There are certain steps you have to take before, an arrears balance reaches 3 years. And then, at the end of 3 years, then there's a tax sale process. So they're from her side of things, she does keep a close eye on it. And she does say that the number of accounts in arrears doesn't seem to grow, doesn't seem to change too significantly. So then the balance might grow, but the number of arrears accounts isn't, there's no drastic increases in that regard.
Okay, thank you.
Yeah. So I guess a final note, keep in mind that most of the expense line items, except for the ones that we really took a closer look at, those bigger items like salaries and wages, RCMP, and some of our contractual obligations. We adjusted for those for 27 and 28, but the ones that have not been adjusted for inflationary year-over-year costs are some of those discretionary items. But those will be kind of related to service levels. Do you reduce service levels as costs go up, or do you increase those? But keeping in mind that ongoing expenses should be funded through ongoing revenues, so either through new growth or and not through surplus or from reserves. With that, any future service level enhancement requests, additional operating expenses from the construction or purchase of new capital items, insurance being one of them, or inflationary cost pressures will need to be funded through an increase in tax rates or fees. So this is keeping in line with that principled approach that ongoing costs should be funded by current revenues, not surpluses or reserves. Now we do have another meeting scheduled for Thursday, February 26th. Maybe I'll take a second here to kind of see if there are any questions from council on specific items. I do have all of my work here. I do have these individual departments and budget line by budget line. If there's anything,
Jim,
if there are any questions.
We're going to take a 5-minute recess.
Sure.
Thank you. We have returned from our break, and I'll open it up to our CFO one last time. Do you have anything else to say before I open it up to members of council for questions before we go into close?
No, I don't. I think I've talked fairly long, so I have nothing more to add. Thank you.
Okay, thank you. Any questions for our presenter? Seeing none, I'm going to require a motion that council move into closed session at 6:43 p.m. in accordance with section 197-4-B of the Municipal Government Act to discuss matters exempt from disclosure for section 19, disclosure harmful to the business interests of a third party, section 20, disclosure harmful to personal privacy, section 30, disclosure harmful to the economic and other interests of a public body. Who cares to make that motion? Councillor Pickering. I'll call for the vote. And that vote is carried. Thank you. Thank you. We're back in session again. So we just finished our budget deliberations, and we had our Chief Financial Officer, Tim Koba, present. Tim, great job on that. I'm not sure how you can stand doing your job when you're looking at those spreadsheets, but power to you for that. Appreciate all the effort that your finance team put into this. So I'm looking for one more opportunity for everybody if they have any questions for Tim before we look at our motion options for budget deliberations. Councillor Avery.
Thank you, Mayor. Not a question, just a statement. Tim, thank you for all your hard work. Ashley, thank you. Thank the administration team. This was a very clear, concise budget, exactly what we asked for. I'm very, very impressed that you tore it all down and built it back up again. Thank you for all your hard work.
Thank you. Well said, Councillor Avery. So seeing no more questions, comments, could I ask member of council to entertain to make one of the motion options at Councillor Avery?
Yes, Mayor, I'll make a motion that we accept the budget as presented with a 0% tax increase.
Thank you. There's a motion on the floor by Councillor Avery. Any further discussion? Seeing none, I'll call for the vote. And that is carried unanimously. Oh, yes. Okay, well, thank you again one more time, Tim, for all that hard work. So that concludes the open portion of the meeting. We're going to return back into closed. So I will need a motion that council move into closed session at 7:20 p.m. in accordance with section 197-4-B of the Municipal Government Act to discuss matters exempt from disclosure for item 13.1 subject to section 19, disclosure harmful to the business interests of a third party, section 20, personal privacy, and section 30, disclosure harmful to the economic and other interests of the public body. Who cares to make that motion? Councillor Reese makes that motion. I'll call for the vote. And that is carried. We'll take a 2-minute break.